let's get right into it. Something big is happening with silver. And I mean, this is a metal that's absolutely critical to, well, our entire modern world. China's just made a huge strategic move, and trust me, this is about way more than just the price going up. This is a calculated play for global influence.
So that leads us to the big question, the central mystery we're going to unpack today. Why did China just, well, break the silver market? Because what we're seeing here, it isn't some random price spike. No, this looks like a deliberate disruption. So let's investigate the strategy behind it.
Okay, so our investigation starts with a really strange signal coming from the market. I'm talking about a huge pricing anomaly, something that's basically screaming that the system for trading silver is fundamentally broken.
All right, check this out. Clue number one is this massive price gap that just opened up. If you look at the numbers from December 24th, in Shanghai, where they're trading actual physical silver, the price was hitting nearly $78 an ounce. But at the very same moment in New York's paper market, it was only $72. A $6 difference for the exact same thing? That's almost unheard of in modern markets. It just doesn't happen.
Now, normally traders would see that and pounce on it in a heartbeat. They'd buy the cheap stuff in New York and sell it for a profit in Shanghai. It's called arbitrage, and it's supposed to close these gaps almost instantly. But this time, it didn't happen. The gap stayed wide open. And there's a reason for that. Traders literally couldn't get their hands on enough physical silver in the West to ship over to the East. The whole link between the two markets was just severed.
And that right there brings us to a huge piece of this puzzle. This fundamental conflict between the world of paper silver and the world of real, physical silver. Think of it like this. There are two totally different worlds of silver. Over here in the West, you've got markets like COMEX. They're mostly paper markets, right? It's for speculators. Most of the trades get settled in cash, not with actual metal. But in the East, it's a different story. The Shanghai Exchange is a physical market. It's for real industry, for manufacturers. The price there reflects what companies are actually willing to pay for real, hold-it-in-your-hand silver.
So just how fragile is this Western paper market? Well, take a look at this breakdown of the silver sitting in the COMEX vaults. A staggering 90% of it, 90% is what they call eligible. That just means it's being stored there, it's not actually for sale. Only that tiny little slice, about 10%, is registered and actually available to be delivered. That is a shockingly small amount of physical metal backing up a gigantic paper market.
And the trend here, it's totally unmistakable. For years, physical silver has just been draining out of Western vaults. It's like a slow-motion river flowing from west to east. And as that inventory keeps shrinking, it makes the paper market incredibly vulnerable to a supply shock, which, you guessed it, is exactly what's happening right now. Okay, so we're starting to get a picture of what's happening, right? The physical market is totally decoupling from the paper market. But the real question is why? To figure that out, we have to rewind the clock. We got to look back at a critical lesson from history that I think reveals the deep-seated motive behind China's entire strategy. Picture this. It's the 1930s, and China's entire economy runs on silver. It's their money. But then, in 1934, the U.S. passes something called the Silver Purchase Act, and it deliberately drives the global price through the roof. What happened next was a catastrophe for China. All that silver, literally their money, was drained out of the country to be sold to the U.S. The result? Total economic collapse, hyperdeflation. By 1935, they were forced to abandon their entire monetary system. I mean, this was a national trauma.
And from that, China learned a devastating lesson, almost a century ago. It's simple. If your economy depends on a material that you don't control, other nations can, and they will, weaponize it against you. And as we're seeing today, that is a lesson they have clearly not forgotten.
And what's so fascinating about all this is that it's not some brand new idea. Oh no, this is a refined strategy, a playbook that China has already run with incredible success on other critical materials.
You want a prime example? Just look at what they did in the 2010s with rare earth elements. China used the exact same strategy to completely corner the market for these metals. And these aren't just some obscure materials. They're essential for everything from your EV motor to guided missiles.
And here it is. Here's that playbook, step by step. Step 1, you dominate the global refining of the raw material. You become the only game in town. Step 2, you reclassify it as strategic for national security. Step 3, you impose strict export controls with government licenses. And then, the final move, step 4, you become the gatekeeper for the entire global supply. You control who gets it and what they pay for it. This is precisely the playbook they are running with silver right now.
All right, let's put all these pieces together now. It's time for the big reveal, the full scope of this massive game for global leverage, and what China is really after.
Okay, the first thing you have to get is that silver has what economists call an inelastic supply. What does that mean? Well, most of it, we're talking 70 to 80%, isn't mined on its own. It's a byproduct of mining for other stuff like lead and zinc. So even if the price of silver doubles or triples, miners can't just flip a switch and produce more of it. And that little fact is what makes China's control over the refining process so incredibly powerful.
And this is where it all clicks into place with the bigger brick strategy. You see, gold's role is all about money. It's about creating trust in a new system, an alternative to the US dollar. But silver's role is all about industry. It's a tool to control the actual physical stuff you need to build technology, green energy, and military hardware. It's an industrial lever to pull against the West.
So what's the end game here? What's the ultimate goal? It's about controlling the refining and export of materials the world absolutely cannot live without. And if you control that, you gain immense leverage over every single nation that depends on them. You get to influence who gets to build the future, and you accelerate the shift towards a multipolar world, one that's not just dominated by the US.
So, you see, when it all comes down to it, the real question isn't, what's the price of silver going to be next year? It's about something so much bigger. In a world of increasing competition, the real question is, who gets to control the very building blocks of the future?